Hey, Ellis, thanks for joining me.
Thanks for having me on the show, David. Nice to see you.
Ellis Chen, the corporate lawyer from Vancouver many years ago. You developed foundational skills in mergers and acquisitions, IPOs, deal structure, that sort of thing, working at a major law firm in Vancouver. Then you went out on your own and you founded Export Ventures Group, which you built into a pretty significant exporter of wine from Canada to China. I think mostly like you did over $1 million and something like 16% or something of the exports from Canada.
Correct.
And as the markets shift, and as they do sometimes, it seems like you're able to pivot and use those connections that you made there and become an advisor for overseas clients looking to place capital in North America and maybe vice versa, leading to your forming Sky Capital for cross-border mergers and acquisitions, raising and then selling it to PricewaterhouseCoopers. Yeah, that was awesome. So where everybody hearing that is, yeah, we want to do that too.
Yeah.
But that exit gave you that personal capital. It looks to begin investing in your own private equity deals and also in real estate. So that's sounds like when your big fun period started with even more fun, where you're doing wealth building and starting to share your story, and kind of led, I think, to that period that you call yourself a serial entrepreneur, where you started many funds, for instance, right? Even a fund of funds and a real estate fund. And so that was a busy time. And today you're a partner at Pender Hastings Capital, and you lead, I think, the U.S. operations. And from what I understand, you're developing this really cool niche as a go-to capital provider for developers of horizontal land improvements. Yeah, and I'm sure I've glossed over a whole bunch of things in there, but I think that summarizes what you've done. And you accomplished all that in the last 3 years or something? No, I'm teasing.
Yes. Yeah. And David, I'm really impressed. You've clearly done a lot of homework. You know a lot about me. I'm flattered. Yeah. Yeah. So thank you for doing the research. Yes. So as you said, came from Vancouver, cemented my business skills in Vancouver, really grew up in the business community over there. Just learned a lot. I was on the board of the Vancouver Board of Trade for 3 years. I was quite involved in the community. So during COVID, I relocated to California, to the San Francisco Bay Area for personal reasons, to join family here primarily. And I've been here in transplant in California in the last 5 years. Yeah, so happy to share kind of my observations of real estate, of wealth management, of business generally here in the United States as well as in California.
Yeah, I think that's a really unique perspective to be able to work in both countries and as a profession really straddle, especially with capital allocation and capital raising and real estate market as well as others. But it sounds like these days your focus is on the real estate, on the horizontal development, funding that category sounds like you're really developing that niche strongly, as well as some private equity, I think, interests in AI. Is that right?
Yeah, so we are capital. So we are a Canadian and US real estate private equity firm. Because real estate is really hyper local, so we look at different strategies across different markets. And what works for Vancouver may or may not work for a different market in the United States, for example. So because I've been the partner that's located here, I've been spearheading the efforts in looking at the right strategy to pursue. So both my business partner, James Livingstone, my GP in the fund, myself, we actually spent the last 3 years looking at the strategies to pursue in the United States. So for example, James actually spent about a whole year in Dallas, Texas in 2022 looking at multifamily down there. Because the interest rates started to hike up halfway through 2022, then that effectively wiped out the equity in any multifamily deal. And so a lot of the deals are actually underwater. And so we saw the writing on the wall. And so in 2023, I think he came back to Vancouver and focused on multiplex developments, as you do, which is a very good niche to pursue in Canada. So then in 2024, I joined the firm, and what we've been looking at was single family home building in Florida at scale, BTR, build to rent. That's a very big thing in the United States. So that's basically horizontal multifamily. Ultimately, we actually ran into some really great land developers in the country. about a year ago and started to look at the strategy. And we just thought it was the real estate's best kept secret. And I'm happy to provide a bit of an overview about exactly what we do. So right now, our first fund in the States is a land development fund. So what does that mean? Land development is land entitlements or horizontal development. Land entitlement is where you go work with the city, you work with the county, and you get the paperwork done, you get the permits, you get the site plan approved by the city council. And so it's a lot of paperwork, right? So once you have that, you have theoretically like land that's entitled to be built into, let's say, a master plan community, 500 homes, 1,000, 2,000 homes. Then what you need is a horizontal developer to come in. So why is it called horizontal developer? Is because they are developing horizontally. They're putting in the roads and infrastructure onto the land that's entitled. They're not building vertically. So building vertically would be building a house, building a tower, right? So they're doing horizontal development. So we are actually the capital partners to best-in-class land developers in the US that turn raw land into finished lots for national home builders, like public companies like D.R. Horton, Lennar, Toll Brothers, these guys to come in and build their homes. And a lot of these really big national home builders are public companies. And like a D.R. Horton, America's number one home builder, they're a $35 billion annual revenue company. But they don't do the land development part. They don't tend to want to do that because owning the land while you're working on either entitlements or horizontal development will show up. The ownership of land will actually show up as a liability. So it actually doesn't do great for a public company financial ratios and things like that. So they have to outsource that function to a third-party company, which is our operating partner. So that's what we do today in our fund.
Yeah, that's exciting. I love the niche that you're doing down there as well. That's a really clever niche, and funding for the horizontal developer is really a specific category. It's in a way, it reminds me, even though it's at a larger scale than what we're doing in Vancouver, where with the zoning change, and I've talked with James many times as well, James Livingston, of course, and that's a Lightwell Developments is a successful developer of multiplex in Vancouver, one of the leading developers, I think, in the space there. And what we've done at LR Homes is my office has just taken a slightly different route to servicing that category. Rather than as a developer, it's really providing developer kind of level support for existing homeowners that don't necessarily want to roll into an LP or something like that. They still want to live there, but they have, I think it's 67% of the homes in the GVRD are debt free. They're mortgage free, and they just bought 1980 something or whatever that was, and don't have a mortgage to speak of or have lots of other assets. So they're in a great position to be able to just use a straightforward debt-based, equity-based construction financing at a low LTV, like 60%, and it pays for the whole project. But they can do that because they have that equity already developed. It's like the developer putting the pool of funds together with the LP. They just happen to have it in one pocket through the equity that they've sat on for the last 15 or 20 years. So we're just providing that structure and team for them. For instance, on the construction financing side, it's just with the debt financing, just private debt, where interestingly enough, the banks and credit unions aren't very helpful with construction mortgages if there's no mortgage attached to the end of the process. It's not really their interest. So most of it is private-based equity. But I appreciate what you guys are doing with a fund specifically for that niche of horizontal development.
Yeah, and I'm a big fan of the model you have created. Most of the people in Vancouver are sitting on a lot of equity in their homes, right? So this is a great way for them to unlock the equity that's trapped. I think it helps a lot of people. It helps the economy. Capital needs to flow. So capital doesn't do anyone any good if it's just trapped and not circulating. So I think it's a great thing that you've done there.
You know, what's interesting, Alice, is that this is a brand new discussion for most homeowners, because historically, as they grew up, their parents and through them owning homes, they have a particular asset, which is the house, the home, and you pay it off and you protect it. But almost overnight, under their feet, that asset changed. It changed class of asset from a single family home to a multiplex property. So there's latent value increase in it. And I call the whole asset class because it's It's large in scale, affects almost 300,000 properties in the Lower Mainland.
Yeah.
It has really clear rules, both provincially and municipally, in regards to the laws and bylaws about how it works. And it's a definitive kind of an investment class in real estate. And I think that's why companies like Lightwell, other larger multifamily builders are coming into the space. Most small builders are scrambling to try to do multiplex. And it's because it's its own space. It's its own category of risk and reward in terms of real estate investment and development. It's really seems to be a lower risk than standard multifamily, both in terms of time and the dollar amount risk, particularly for a homeowner, because they can absorb changes in ultimate selling price and that kind of, and still come out profitable because they didn't have to buy the land at today's prices.
Exactly. I think it's a great development. Having been in Vancouver for so many decades, I think this is a great movement. One, to alleviate the housing crisis that we have observed for so many years. And two, it democratizes development for your average homeowner. So I think what your firm provides is excellent. Why go into development as a homeowner if you don't actually have the skill set, right? Partner with someone that actually knows what they're doing and unlock the value.
Yeah, I talk to homeowners all the time, and it's interesting to have that conversation because it's on the surface they're going, oh, this sounds like a good idea. We should be able to make some good money. And in many cases, it's over $1 million. And they're not really, and there's no reason they should be, but they're not really aware of there's some primary categories. Like first is financing. Another is actually tax planning, estate planning, and tax minimization, organizing things in advance rather than towards the end. And that's worth several $100,000. And then who the team is, I think you alluded to it, Allison, in your guys' projects in the States, where you're providing equity-based funding, I think it is, rather than debt equity-based for the horizontal developer.
Yeah.
One of your criteria is looking at the quality of the operator.
Yes, the first one. Yeah, that would be the first thing first hurdle that has to be crossed before we partner with someone.
So we're trying to teach and educate and at least share that perspective with homeowners as well. Just because they haven't been professional developers doesn't mean they should ignore these basic steps, right? Who's the operator? Like even from a lender, the lender, that's their first private lender as well, even though they're registered lenders, but it's still, who's the operator? Are they going to finish the project? Are they known? All those kinds of things, are they have structure and systems and disclosure and all that, so that it reduces the risk, obviously. So,
yeah, absolutely. Due diligence is so key to any successful investments, right? And I've taught many master classes on private equity fund formation and due diligence. And yeah, you're absolutely right. I think your partnership or the operator that you're selecting to partner with, who they are, their track record, all of that is actually it's a non-negotiable. Like you have to, that hurdle has to be passed. Yeah. So I think kudos to you to bring this educational dimension to this discussion.
We're just starting. We're figuring out how to communicate it and how to create the awareness, even because it's a very fragmented industry. There's, I think, last time I looked at BC housing, obviously you have to be registered with the government to build a house for somebody.
Yeah.
And last time I looked in the Lower Mainland, there was 5,620 registered builders in the Lower Mainland. And all of them, good or bad, have relationships with people, and everybody's doing some work. So that's a bit of a challenge in this category, as well as having enough reach with the right kind of information and safety nets so that people are aware. So when they're making their decisions, who to work with and what team to put together. If we have a structured team, and I'm sure there's others being formed out there, but they're just so that homeowners know the better questions to ask.
Yeah, and I think you and I talked about this. I think psychologically, it's not so easy for a homeowner to leave their home, right? Because the multiplex development, it will still take about 2 years, 3 years, I think, on average. So I think if you can provide some type of value add service in the kind of ecosystem of activities that would be triggered by the homeowner actually deciding to do this. For example, if you can help them find a relocation service, right? Put them up in a nice, I don't know, Airbnb or monthly rental for extended period of time, but just help them stay in the same neighborhood or stay in a nice place during the construction phase. I think that really helps. And at the same time, I think you and your team have great foresight in venturing into the AI space. And I think you're about to launch your website, venplex.ca. So I think when that happens, it would be easier for homeowners to actually come in and type in their address and see how much equity they can unlock and start to visualize what life could be like by empty nesting, like from one giant house where the children have gone away and started families elsewhere to down to maybe one out of the fourplex and one out of the sixplex. So I think there's this movement of simplifying living and moving into more of a minimalistic type of consumption pattern. So I think that's all really great advancements.
Yeah, you got your finger on the pulse of it, and what the needs are of people too. Like, where do you live while this is going on? We do have a rental agency in place to help clients do that. So all these friction points, even the strata management on the back end, so that it's just easy all the way through. And you're right on that. I don't think I shared with you we're launching Vanplex later in the month on the 12th of June, but okay. I don't think I shared with you a sneak peek of it yet, did I?
I think maybe I've seen the front, but I haven't really plugged in my address, for example, to test it out. But I'm happy to be a beta user.
Yeah, let's do it. Are you okay with that?
Well, not right now.
But we'll use somebody else's address. How's that?
Sure.
I'll share my screen, and I want you to see it and get your take on it as well.
Okay.
Yeah, just take a sec here let's see. Okay. So this is what the front of it looks like. Oops, hang on a sec. Let me just go here. So this would be the really simple. I used to do these things with several people, and it took either a few hours or a couple of days, depending on how busy everybody was, and a few $100s to get the performance done. But we can do a lot of it with software and some AI empowerment now. So it just starts here, and you just go type in an address. We won't use yours, but I'll just type. If you just start typing, it brings up the address that you can choose from. But if you don't see it, you just keep typing your till you see it.
Okay.
And then it works its way through. And if it's an R11 zone, and it'll figure out this amount of units, like here it's figuring it out. You can do 6 units on here, and it's developing the pro forma right now. So the market analysis, you can see, is right here. So it just takes in the circle around that address, the solds, and then it weights it, do a bit of a comparable weighting to get a more reasonable indicator of what the property that's actually behind this tree here, what it would sell for, which is $1,200, the units, which would be about $1,265 a square foot. And you can see it's medium low confidence on this one. Some of them are high confidence, depending on what that mix is. So this one's eligible up for 6 units. And then, what's going on? So it goes from there. And then the next pages of it just step through those next steps, which is, do you qualify for the financing? If you just press a button, and you figures that out for you, and then just moves down that step. So it's really pretty simple. So people get a copy of the pro forma, the amount of units, the dollars, the profitability that it makes, so they can see the square footage, how much it costs to build, what the financing rates are, what the cost to sell is, like the realtor fees, and how much profit is left relative. And then you just do a return on equity against, well, if the property is currently worth $2 million, and if you do all this and you'll make $4 million, that's a 50% return on equity annually over 2 years. So it's just got that kind of thing. Or if it's 7%, it shows you that right at the beginning as well. And you're going, okay, then we shouldn't pursue that one, or maybe we shouldn't think about it.
Yeah, this is a great tool that you guys have developed, and I assume you will help the homeowner with financing, arranging financing, as well as the actual sale process of the multiplex. So you do it all the way through.
Yeah, that's right. So the financing is already in place. So there's a backstop. If somebody has lots of assets and they're higher net worth and have their lower cost of capital available, that's great. Most people don't. So the private lending for construction financing, just based on the equity in the property, is in place, and it's just a simple 60% loan to value.
Yeah.
Starting with the property value, get enough cash to get out of the ground, and then it's 60% of the value created with the multiplex.
Yeah. Okay.
Yeah. So how does, from what in California, do you see Like I go online and sometimes I'll hear things or see headlines about different states or different cities in the US where they're using the same terms we're using up here, like missing middle and these kind of things. Do you see a need for something like this
Oh,
in the
absolutely. Yeah,
world?
it's definitely started. So I know that this exact thing is very popular in the Seattle area, for example. In fact, I have a friend who's specifically a developer for ADU. So both in Washington state and in
Right.
California state, we don't say multiplex development, we will say ADU. So accessory dwelling unit. So AD
Right.
increasing density through ADU build out, whether it's detached or attached to the main house. A
Oh,
lot of the times in California, you'll see what we call a laneway house. Like in
yeah.
BC, we call it laneway house. Here, we'll say it's, I don't know, the in-laws suite or something. So it's a
Mhm.
detached house, smaller house behind the main house, but that's typically an ADU. There's also a lot of tech companies, like one of the founders of Airbnb, Joe Gebbia, like he has a company called Samara, who does these container, like you can drop these container, like already everything built in to the
All right.
container. You drop it on into basically into your backyard, and that's your ADU. So this ADU development business is actually quite thriving. I would say in Seattle area, in the Bay Area for sure, San Jose. I don't work on this specific business in the state, so I don't know the detailed ins and outs, but I know the ADU is very popular. Same thing in San Diego. So most of the urban centers, this is pretty much what has to happen just because you have limited amount of land to build on. This is very different than the land
Mm,
development projects that we fund in the Sunbelt states. Like
that's
in
right.
those places, there's so much land to be developed. We're talking
Yeah.
about building thousands of homes in one shot.
Yeah, and it's all horizontal. That's not high density towers. That's
Exactly.
like single family homes or duplexes or maybe townhomes, those kind of things. But
Yeah.
yeah, no, that's beautiful. You between all that, do you see like macroeconomics playing out where it affects go no go decisions by the publicly traded builders, D.R. Horton and so on, where it just filters back to the horizontal development then because they're just making sure they have enough in front without loading too heavy.
Yeah, so that's a great question. And in fact, I was just in a meeting right before I came on this podcast with two land developers. So they're developers in the Arizona area. And
Mm-hmm.
then they talk to the likes of D.R. Horton, Century Homes daily. And most of the America's home builders are actually feeling very bullish. So even though this year, I know because of the tariffs and because of the new administration and fluctuating headlines, it's a little bit disconcerting for the everyday investor, even high net worth investor. So I think everyone's psychologically rocked a little bit into Q1, but I think things are stabilizing. And most of the home builders are very eager to move inventory. And they are actually expecting to have a really great year, 2026 and 27. And
That's really
because
interesting.
yeah, there's a couple things to it. So one, there's actually a huge deficit of single family homes in the United States. So 4.8 million single family homes are missing. So this is because of the pent up demand and the pattern of underbuilding since the last economic recession of 2010. So we've had a pattern of underbuilding, and this is why we have this pent up demand of 4.8 million in deficit. So that deficit is not going away anytime soon. So regardless of what's going on in the news headlines, people need places to live, and
Mm,
household formations are happening. A lot of the times the numbers are not just young families forming new families, but it's older people downsizing, needing new homes, or households being split into multiple households. So the household formation numbers are still really strong. And so the national home builders in the States are adjusting their margin expectations this year. They may be adjusting the product type, whereas before maybe they're building a move up home. Now a lot of them are very focused on the starter home between 250,000 to 450,000. And a lot of these starter homes may even be for BTR, build to rent,
mm,
or worker housing. So
mm,
if you think about even just looking at all the chip factories, Nvidia, TSMC, like these companies going into states like Arizona and Texas, like they need massive amounts of worker housing, right? And
mm.
yeah, and we still feel very bullish about the land development thesis. And we're going to continue to pursue that. And just like investing in the stock market, you buy in the dip and you harvest in recovery. So same thing in real estate.
Yeah, it's interesting to hear you say that when I'm speaking with lots of homeowners that are even partway into the planning and pre-construction of a multiplex are having pause because of the headlines. And it's, to your point, it's interesting. I made a point of looking back on what was trending social media 2 years ago, because what they're doing is saying, well, here's what's happening today, and there's some uncertainty. And so we don't know if we want to build into that. But we're talking about selling something 2 years from now, not in 3 months from now.
Yeah.
And so I said, what's that look like? So if we went back 2 years, did anybody have what's happening today on their forecast, or was it being talked about? And of course, the answer is no, because 2 years ago, all the headlines were, oh my God, it's so expensive. There people are buying properties sight unseen, overpaying, like all these kinds of things are happening. And that's when psychologically people want to jump in, fear of missing out.
Yeah. And I think
let's build a multiplex now.
Yeah, exactly. Yeah. And David, we're in the same boat. I'm in the investment industry. So it's the same thing. We're dealing with the same investor psychology, even the people in crypto. The same thing. There's a line of people looking to buy Bitcoin when Bitcoin was 100,000, but it dipped recently. It's back up now, I think. But when it dipped to 80,000, people stopped buying. So it's very interesting, this human psychological element in working with money and how people perceive money and opportunity and risk. Is just really interesting. So I think that ultimately the successful investors in any type of asset category are the ones that can just keep themselves not panicked and grounded and just make rational decisions as much as possible.
To help folks make a rational decision and feel a little more comfortable psychologically, it's good to understand what their risks are so that you can mitigate them at least, or feel some agency in it. For instance, and you can tell me what it is in your field, but in multiplex, there's really two obvious places, right? So one is begin the planning and do the massing, how you're going to configure the multiplex, why you're doing it for multi-generational living or for profit. That mix and match, get it right. But you get to a point where you're issuing or applying for the development permit. Once a development permit is issued, it's good for a year, and then you can renew it for $1,200, I think, even if it expires. So because from development permit, you need to go to building permit, which is another gap, and then wait for the permit to be issued. So it's not, if you decide to start today, you're committed to it. You start the planning process, which is a relatively small investment, and then development permit, you can lift your head up and go, is the world falling apart, or does it seem to calm down? If it's calmed down, we'll keep going. If you feel uncertain, then that's a good place to just hold for a bit, but you're closer to the finish line, because when the market does come back into what the larger builders are expecting in 26 and 27, I think the same thing in Canada here, it's going to come back, I think, with a bit of a vengeance, because they're so underbuilt. And so this brings them closer to that starting line to be able to put product in there. And you can do that again at the building permit. You don't have to start building and tear down the house. The old house, you could hold right there if things don't look, it looks terribly unstable, right? If there's some weird stuff happening in the world. But you got those two natural risk control points there. And I think that helps people navigate how to move in the direction they want to go with some agency. And
absolutely. I'm a big fan of always getting in position to prepare for optionality. It's a great place to be when you have optionality, but things take time, especially things in real estate, in development. So get yourself in position. And if we're just talking about $1,200 to renew that, even if you don't want to do it right away, it's no big deal. Like, at least you're in position. And when you do want to do it, then you can go ahead. So I absolutely think people, if they're curious, they should look into it, just as a financially prudent investor would do.
Let's switch gears a little bit to AI, because I know, like, when I think of our construction industry on the vertical side, I see AI showing up on the front end in terms of lead generation, data management, financial management, those kinds of things, and a little bit into some products like camera-related products where you can scan the existing site, collect data for the record keeping, those kinds of things. Some innovations on different product lines, but generally we're still hammering nails into wood and producing the product. And And I know that one or more of your past projects was a fintech anyway, that software, some AI related probably, but what's your view on AI and construction and real estate?
Yeah, I am feeling very bullish about the potential of AI application in the real
Mhm.
estate industry or any type of legacy industry. So private equity would be another one. I am
Mhm.
not the earliest adopter of AI. Only really started to really work with GPT, for example, about 8 months ago. But now it's my daily companion. Don't seem to do anything without
Do you,
GPT. Like it's
you
with
do more
me.
searching with it now?
What was that?
Sorry, do you search with it as well now?
Yeah, so it's interesting because I think maybe the people in my generation or your generation are using it like a Google Plus or a new version of Google. But if you really get into how GPT is supposed to be used, the power is amazing. For example,
Mhm.
I built our investor deck for the private equity fund using GPT. Of course,
Mhm.
there's fact checking and all of that, but what would typically take an analyst like years, I'm not years, a long time to do, like a couple of weeks, a month, GPT could do it in one day. So I built my deck. Of course, the concepts were there, but I was able to build like 80% of it within
Mhm.
2 or 3 days. So it's so fast. And right now I'm working on a TEDx talk. So it's helping me rewrite the draft and polishing up. And it's just amount of time that's saving me. It's really amazing. So the younger generations, like the people in their teens, their 20s, the way that they use GPT is very different than our generations. They actually use it as a life advisor, right? As a
Yeah.
friend. Think of it as a really smart friend and that knows everything and knows you better than yourself. And they can synthesize at the speed that I don't think a human brain can replicate. So it's just really amazing once you get into it. So right now, for me, I'm very geeked out on looking at the different applications out there. Uh,
Mm.
I think there's probably a suite of at least 50 that you can use. So things like Jasper for helping you write blogs, or Midjourney that helps you create graphics or videos. There's a bunch of them that could be really stacked to improve workflows, efficiencies. And I think that would be a very good use of AI in legacy industries. I think that in development, what's going to happen is that I think in about 10 years, maybe 5 years, we're talking about all the houses that are going to be built will not be a stick build. It's going to be a modular build, steel
Yeah.
frame modular build, parts produced in a factory, assembled like a car, a Tesla factory. And
Mhm.
so every single house will be built in 3 days by two robots. So that's the kind of future we're projecting into. So if you think about that, then what is really the value in the real estate when you can mass produce using robotics and using AI? Then really I think the true value lies in the land, right? Or in the
Mhm.
location. So I think that's the direction we're headed into.
I read a really interesting year-end letter from Chamath Palihapitiya that I don't know. Have you read it?
What did it say?
He said a lot of things, but the is really focused in three areas. One is AI. One is like energy production,
Yeah.
and the third was the creator movement. We all see it in media in terms of lack of trust in old media. Social media is becoming the more of the go-to for understanding our world around us and participating in it. But it changes things. One of the big examples is Mr. Beast. Because of the reach, he was able to take, instead of getting sponsors, for instance, for his channel, he was able to use his channel to create products like Beastables or whatever, and he generates this income. And now he's got something between it all, 500 million in revenues and reinvesting. So it's this virtuous cycle. Those kind of things weren't possible 10 years
No.
ago, 8 years ago, but they're possible now. So it's really interesting to think about how all of that converges into fields where any one of us is an expert in what we've done over the years, because that's where we know it the most, and that's where we're most in tune with what are the challenges or problems, and also most blind probably because we're so close to it for so long, we see it a certain way. I think to your point of being a newbie in exploring AI and what AI agents can do and those applications are, it starts to rewire the brain in a way where you see things differently and things with new paradigms in the same industry that you've been so for a while. At least that's been my experience. Or What's
Yeah,
your
yeah, for sure. In a way, I feel a little bit bad about the young people coming up. So the people graduating, and I'm just like, okay, by the time you graduate university, what would you be doing? Like the AI agents would be doing most of the work, right? White collar jobs. And it's almost, I feel like humans are then having to stick to more, I feel like trades, like blue collar type of fields, unless they find AI applications in legacy industries. So I think there's still a
yeah.
really big arbitrage opportunity in helping business owners in these legacy industries apply and adopt to AI. I
Mhm.
see it's a very difficult lift. It's almost like it reminds me of the time when internet just became a thing and watching my grandparents adopt to it and watching my grandparents figuring out email or figuring out iPhone. So I sandwich between the two
Mm.
situations. I feel bad for people on the either end. It's a steep learning curve.
One of my favorite photos that I have is at, I think it was Christmas time, the family's together and it's a picture of mother-in-law with her daughters around her looking at a laptop.
Yes.
And mother-in-law is using the zoom function, which is holding up a physical magnifying glass to look at the screen. And that's her zoom function.
Yeah.
Yeah, totally get what you're saying there.
Yeah.
I think,
Yeah. I work with interns at our firm, and some of them are still in universities. And I don't think these guys can or girls can do homework without a GPT or Claude or Gemini or any of these apps. Like they're so attached to having AIs. They're part of their brain. It's not even a second brain. It's almost like they
yeah,
can't do it. And I can see the reliance because as I started to really work with large language learning models myself, I can start to see the reliance of that. I talked about my TEDx talk recently. I also got invited to write a chapter of an anthology. And across all these projects and my already very busy and very full plate, I was starting to panic. I was like, how am I going to get everything done? And yet, with the help of GPT, I got everything done in 3 days. So it's just amazing how much time it could
yeah.
save you if you really truly got into and understood that.
It's interesting. It's almost there's a bit of a not a limit, but a resistance for cognitive ability inside our
Yes.
skulls. So a
Yes.
lot of it used to be taken up with remembering stuff like where to turn when you're driving,
Yeah.
or what temperature should halibut fillet be cooked at, what's internal temperature it should be at again. Like all these things I used to know, I
Mhm.
don't know anymore. Now I'm just going to Perplexity and going, what's the temperature for this? Or the drive on my Tesla doing it's driving me around, and or I'm not having to remember those things. So my brain is, but now we have a responsibility to redirect that internal cognitive ability into useful
Yes.
ways and not just squander it on.
Yeah. Yeah. So I do hope that as humanity, as a species, we're headed towards this renewed Renaissance age where there would be decent universal income. I
Mm,
find that maybe most people are not suited to really labor and produce. So maybe they're better off. Like we have more movie
mm,
makers, right? More artists or more people pursuing different things in life. That's what really life is about. So hopefully this is all going into a very positive direction.
Now, one of the things that I've been on a practical level that we've been looking at integrating into Vanplex is like when you put in your property address and it comes up and it's, let's say it's positive, then the natural instinct would be to go, as a user, to go, I wonder what that would look like on my property. So obviously there's already going to be plans that have been approved and passed permits already. So they already fit. If they fits on the 33 foot by 122 flat lot, it'll fit on everyone.
Yeah.
So you have these drag and drop options where you could literally drag and drop the model of it in full sort of video 3D and onto your property so you can see it from a Google Street View. And oh, that's what it's going to look like, that kind of high quality definition. So that's actually available now. It just needs to be applied to that kind of use, that kind of application.
Yeah,
And
I think that's great. I think the more you help people visualize what life could look like, that the better, the more they're able to adopt to this new concept. I'm curious, David, are you seeing a lot of intergenerational co-living desires, like people that want to turn their single family lots into multiplex because they want to live with different generations on the same
yeah, the last two we built were actually intergenerate or multi-generational.
site?
So that's interesting. I think on like when we're doing all these performance talking with the larger volume of people about multiplex now, statistically, it's looking, and it's a small sample, so I'm not sure how accurate it is, but it looks like about 70, 72% want to continue living where they live. They just want to set that, like lots of them are older because they bought a long time ago and they're in my age or older, and they're going, an extra $1 million would be nice to be in my retirement income or whatever. And I don't need the big house anymore. And it's built in 1950 something. So it's time. So anyway, to have a nice place. So they're thinking that, but the other, I would say that probably around 15%, maybe 12%, somewhere in there, are truly multi-generation, where they want to have, they want to have the kids, the grandkids, they're trying to help their children, or vice versa. The adult kids are trying to help their mom or dad or whoever's left, or mom and dad, move from where they're at into a more safer, convenient environment where they're closer. Those kinds of things conversations are going on a lot. So I think it's in that 15% range, probably only for the multi-generational.
Okay. Yeah, very interesting.
Yeah, it's neat. This has been fun. I'm sure we could go down, pick a couple of rabbit holes, and spend more time going exploring things. But is there anything else that you'd like to chat about, Alice?
I think it's interesting because I've been in the States for the last 5-6 years, and I do notice a little bit of a difference, I think, between the way we do things as Canadians and Americans. And I would say we are too polite still. I would invite my fellow Canadians to just channel more of that go energy, make things happen. I feel like there's still a lot of opportunities. And because of climate change, I wouldn't be surprised if in a couple decades people are migrating north. And so I think there's a lot that can be done in terms of business, in terms of real estate.
That's a big thought right there, Alice. That's powerful. That sounds like the invite for a second call.
Okay, sounds great. It's been a pleasure talking with you, David.
Yeah, likewise. Alice, if any of the folks watching this want to reach out to you directly, what would be the preferred way?
The easiest way is to check out my website. It's alicechencompanies.com, and you'll find a way to connect with me there.